Good afternoon, everyone, and welcome this afternoon to Market Movers. This is Ben Watson here with you. It is another great webcast from Schwab Coaching. In fact, it is the last webcast of the week, and hopefully this will round things out for you and get us started looking over the horizon for next week. I'm joined in the chat there by my good friend Michael Fairborn. He's a 20-plus year veteran in the financial markets. He's going to be there to help answer your questions along the way. Remember, this is a 30-minute show. We're going to keep it high energy, and we are glad that all of you are here with us, whether you're on the live version or the recorded version. Let's get into things today because it has been an interesting and yet a strange week. So let's take a look. A couple of quick reminders, though. Everything we talk about simply for illustrative and educational purposes only. It's not a recommendation of any particular security or strategy. We're not going to necessarily talk about options in this discussion, but just a quick reminder that options carry high level of risk. They're not suitable for all investors. Make sure that you aware the characteristics and risks of standardized options before considering any option strategy. Also, we're going to be using the Thinkorswim desktop software platform. It is not a guarantee of future success out there in the real world. However, it is a good learning environment. Make sure that you're aware of the fact that some of the things that the live trading platform does are not replicated on the paper money platform. Also, remember that past performance, no guarantee of future results. Investing involves risk, including loss of principal, and stop orders aren't guaranteed. So now that we have that out of the way, let's go ahead and take a look at what's going on in the market. I'm going to pop over here to the Thinkorswim desktop software platform really quickly. We're going to take a look at the indexes, as we often do, to kind of round out the week. I wish we could sell merch, Christopher. It would be fun. I would like to be able to do that. But let's take a look at what's going on with the SPX today as we look at the broad market indices. It was a little bit of a gap up and sell-off day, but there's something else possibly afoot here in the S&P 500 in the broad market. So I want to draw a couple of lines here. I'm going to grab my line tool down here, my trend line tool, my drawing tools, and I'm going to come over here to the previous level of resistance where we were seeing that move before we saw the pullback into that April low. And I'm just going to draw across that level here. And across that level, just right about that 61.48 level on the SPX, we can see that price broke through it just about 2 weeks ago. We tried to test back down to that level, bounced up from it. But that might be, in fact, if we want to think about this, the potential for a breakout and a retest. And if you want to just kind of think about what is possibly going on here, I'm just going to draw this with the magic marker really quickly. So we've got this kind of horizontal resistance area. We've got a bounce up off of that level and a reverse from that. And then we've got to move down to this kind of skewed double bottom, which is fine. Then we've got a rally or continuation of that rally and a little bit of a pullback. And then we've got a little bit of another pullback here and then a rally. So from my perspective, even though it's not idealized, that kind of looks a little bit like an inverted head and shoulders. I know you got to get a little bit creative, right? So we kind of have to draw our eyes here and make this an upside down inverted head and shoulders. Now we can turn that frown upside down if potentially we get the breakout, which we've had, breakout and the pullback, and then the possible rally here to the upside. Now, that's possibly what could be going on from a technical analysis perspective. No guarantees of that. Obviously, this is, something that could change. Market news. We're in the middle of earnings season. We got a lot of stuff coming up. We've got a Fed meeting. We've got tariff impact deadlines ahead. We've got jawboning on both sides and all around in terms of political and financial and financial independence concerns, if you will. All of that is adding to kind of this perspective of what's going on with the market. Grinding higher, grinding quickly higher, but potential is in here for a pause. So the breakout of the resistance level, the pullback to that support level or near that support level, and then the possible rally out could lead to a move higher maybe even symmetrical to this inverted head and shoulders, but by no means is that a guarantee. And as we take a look at this, and I'm going to grab my line tool here once again. Let me grab that line tool and we'll pop that in here really quick. You can kind of see what's going on here. We have this little bit of a resistance in the short term that this market is running into right about this 62.89. And in fact, we came back just to almost that level today after that little bit of a gap up and sell off. The other thing that I noticed going on here in the broad market, I'm spending a little bit of time here of our precious 30 minutes, is very simply this, because I think this is significant and important from a technical analysis perspective. We've got a fairly easy to see, you don't have to squint at it very much. We got a fairly easy to see bearish divergence on this SPX. So I'm going to zoom in a little bit and let's talk a little bit about what the importance of this is. RSI is backing off a little bit. That says that these candles are closing closer to their lows. So we're seeing more pressure to the downside, even though overall they're just kind of coasting higher. And in fact, today we get the gap up and that little bit of a sell-off to just at or above that resistance level. That would suggest that this wasn't a move today with a lot of oomph behind it. In fact, this whole week has been lack of oomph, if you will. And what I'm going to do is I'm going to change this time frame now down to a 5-day, 5-minute chart. And the reason I'm going to change this down to a 5-day, 5-minute chart is it allows us to see what's gone on over the course of this week. There has been a fairly strong trend at play, at least there was so these are each of the days, right? So here's today, yesterday, day before. That looks like kind of a mirror image almost of what we were seeing, not necessarily a mirror image, but a replication of what we were seeing on the longer term chart, right? That pull back into that intermediate time frame, a very strong rally, and then some sideways movement. And that's kind of what we got going on here in the short term. It is a Friday. It is, we're deep into the summertime. Fridays are fairly slow, especially since we've had some pretty big upward movement in segments of the market over the course of this last week. So let's pop this back to our 1-year daily chart. You can kind of see what that's doing for us here. Let's take a look at the NASDAQ. NASDAQ a little bit stronger. And when I said segments of the market, notice not really a bearish divergence at all here on the NASDAQ over the course of this last little week. In fact, maybe if anything, maybe a little bit of a hidden bearish divergence in that the RSI was staying at roughly equal highs while the index itself was moving to higher highs. But it's not a lot of big momentum candles. So this is grind and churn for the summertime, right? And this is a typical summer type of pattern. Nevertheless, over the course of this week, we've seen some pretty significant things happen, right? Last night, we saw some changes, or night before last, we saw some changes fundamentally in the cryptocurrency space. More to come on that, obviously. Over the course of this last week, we've also seen changes in the semiconductor space, which is going to drive this NASDAQ market to a large degree in terms of trade constraints on trade with China and others. And so that's led to a little bit more strength here in the NASDAQ. So seeing that strength would suggest that maybe this is an area where there is potential movement. Now let's take a look at kind of the crown jewel of sideways movement, if you will, and that is the Russell 2000, the small caps. And again, rally up, a little bit of a pullback, rally up, and we look sideways here. And to my technical analysis perspective, right? I don't know if it does or not, Christopher. Good question. We kind of have this, right? Rally up, pull back, rally up, pull back. Kind of have this kind of oscillation between that 50-period moving average, the 200-period moving average, and that resistance level. So now, at the very least, over the course of the last 2 weeks, the Russell 2000 has gone above the 200-period moving average. Hasn't been that way for a while, right? But we have the 50-period moving average inclining, and we have the RSI kind of bailing out on us a little bit. So sideways movement on the index, downward movement on the Russell 2000, again, might indicate a pause. We may very well, until we get some clarity from the Fed, and maybe that comes as far out as maybe Jackson Hole in the middle of August, we may see this Russell 2000 continue to kind of grind sideways here under that resistance level. We'll see. That remains to be seen. But technically, that's kind of what we're seeing. Not a really strong leader other than technology, and not overtly so relative to the other major indexes. Let's take a look really quick at the VIX, the volatility index, see what's going on with volatility. I'm going to pop down here and we're going to bring up our VIX grid. We've looked at this before, the VIX grid. And boy, once again, you talk about grinding lower. 2 days ago, we saw that move up in the VIX above its moving average intraday when there was some job owning once again about the independence of the Fed. And then we see the move back down very, very quickly. That volatility bled off. That is the nature of volatility, just like it is the nature of the scorpion to sting. It is the nature of the VIX to make short, sharp spikes and then bleed off very, very, very quickly. And that's kind of what we've had happen here. The VIX also is kind of sitting right in this little range between this uptrending, inclining, not traditional support, but an area where it has coalesced and kind of, again, sitting back in the 16 handle, down a little bit, but kind of getting squished here. Let's take a look at our VIX versus VVIX grid. VVIX and VIX both coming down, not really much leadership one way or the other here. And VVIX kind of coming back into closer correlation with the VVIX. So volatility of VIX kind of bleeding off a little bit. That suggests not necessarily complacency, but at least some summertime quiet calm. But remember, calm can get upset very quickly, especially when you say, it's quiet out there, too quiet. And that's when something typically tends to jump out and scare the market. And we've seen that happen before. And we are certainly in a geopolitical environment where that can happen. We are certainly in a domestically political environment where something like that can happen. So that's something to be aware of, right? So let's take a look at kind of a couple of other forces at work. I'm going to put my single grid on here, as we often do. Clicking on the single grid, that'll bring up just this individual chart. And I'm going to change my indicator. I normally have the implied volatility here, but I'm going to change my lower indicator. I'm just going to close that one down, and I'm going to put in here RSI, Relative Strength Index. And that's an indicator that we use quite often as an indication of momentum. So I'm going to look first at /CL. Now, this is the futures contract. I'm using it not as a tradable instrument in this case, but I am using it, in fact, as a measure of market movement. Gives us a display of what's going on with crude oil prices, which, since that April low and then the echo of that April low in May, we've been seeing crude oil with that kind of geopolitical spike that happened, but crude oil kind of starting to bleed back down a little bit in the last few days, squeezing down into this little bit of a maybe falling wedge in this particular case, kind of sitting today right about the 66 mark. That's not necessarily holding true for gasoline across the board, /RB. Gasoline echoing to a certain extent, but staying a little bit elevated, maybe a little bit more so, and then regionally certainly elevated, /HO, the heating oil space, definitely moving higher. And that has some implications for some of the companies that have reported earnings over the course of this week, namely the airlines. And so we'll talk about those here in just a minute. The other thing that I want to look at is /HG, copper. We've seen some continuation of and a little bit of a flag movement today in the copper space. Again, these are the futures contracts. We're not using them as tradable instruments. We're using them as a metric for measuring the market. Now, this might suggest, given a relatively lukewarm CPI print this week, that the economy, the construction economy, the industrial economy, still moving a little bit higher here, dragging those copper prices upwards. And we can see that happening here. The one last one that I want to look at in terms of the metal space is /GC, GC. And I looked at this. I actually put this on Twitter. I did a little video on this and the relationship between gold and the US dollar. By the way, you can follow me on Twitter on X, formerly known as Twitter. I am at Ben Watson CS. Michael Fairborn is at Mike Fairborn CS. You can follow us there. You can follow all of the other coaches there to see what's going on. And gold kind of finding a little bit of a sideways move here in terms of that safe haven play. So as dollar has been strengthening, gold's kind of been bleeding off or kind of falling off a little bit here to that sideways direction. So now what I want to do is I want to change our grid really quick. I want to come over here to our sector grid. We're going to take a look at our S&P sector grid, and I'm going to put this on the full view. We're going to take a look at those individual sectors that are moving, and then I got a couple of other things that I want to talk about as we kind of wrap this up. So energy turning to the upside just a little bit. This is the 50-period moving average, and I use this as kind of an overall view. 50-period moving average turning higher, even though we see that little bit of a bleed off. As goes crude, oftentimes so goes energy. We had earnings from Chevron. We had a move in Chevron, CVX, that was a result of some regulatory and legal overhang getting resolved as far as their merger with Hess, maybe moving and lifting, again, that energy sector. Materials, also with the strength of copper, with the strength of gold, with the strength of other material prices and increasing demand domestically, seeing materials seeing some additional strength here. Industrials continuing to be the stronger of the leading sectors other than information technology. So take that out. And that would suggest that where there is some CapEx spending happening might be in the industrial space. Consumer discretionary still moving higher. Don't discount the U.S. consumer unless you're looking at staples, which have kind of started to roll over a little bit as far as that 50-period moving average. Healthcare continuing to make that move to the downside, likely on decreased spending in the Medicare space, having a drag effect here on the healthcare sector. Financials, as we start to get into the big banks, we had American Express reporting. We've had, over the course of this last week, JP Morgan, Wells Fargo also reporting as well. But financials continuing to move higher, maybe flagging out a little bit here. Information technology strong, communication services strong, utilities very strong. In fact, breaking out of a resistance day, real estate kind of languishing. So let's pop back into these individually and kind of take a look really quick. Let's pop right back here and go to our individual cell utilities, breaking out as we do this. I'm going to do this really quick. I'm going to come to our flask icon up the top. I'm going to do comparison, and I'm going to compare this sector to /10Y, which is the 30-year, the 10-year interest rate. So I'm going to click on apply, and we can see that these typically tend to move sometimes in opposition. They have been moving in lockstep with one another. Now maybe resuming that oppositional relationship where interest rates down, and that having an impact positively on the utilities because we're seeing that breakout. Now, the other thing that's maybe working here is that some of the companies that are benefiting from the AI rotation, if you will, and the strength of the AI space, especially in the power generation space, fall within the utility sector because they are publicly regulated utilities. But you're also seeing some pivot into things like nuclear and others, and infrastructure within the space. So that maybe is having a benefit on the utilities as well. So let's kind of pop back through here. Communication services going sideways. Infotech just rocking and rolling. That little bit of a pause here today, but Infotech being led by companies like NVIDIA, AMD, and others, TSMC, that have been moving higher. Financials pulling back a little bit, flagging out a little bit. Healthcare continuing to move down. Consumer staples maybe giving us a little bit of a bear flag here. Consumer discretionary right at the cusp of a potential resistance on the heels of Prime Week. and the strength within that particular space. Industrials continuing to move higher, a little bit of a gap up and sell off today in the industrial space. Materials moving a little bit lower, a bit of a bear flag, and then that little bit of a bear flag that we saw on energy. Nevertheless, that's consistent with what's been going on with those energy prices. All right. So now that we see that, let's take a look. I want to show you a couple of other tools that we've been using. I'm going to pop over here really quickly to our Schwab.com website. And on the Schwab.com website, and we've talked about this before, again, this is Schwab.com, then the research tab, then US markets. What I'm going to do is I'm going to come over here to the calendar. Not only do we see some breaking news information here, but I'm going to come over here to the calendar to today's events, and then we're going to look across the breadth of the week here. You can choose what week you're looking at here on the calendar. You can choose the days that you're looking at. And so here we have building permits actually came in a little bit stronger than expectations. Housing starts came in barely stronger than the market expectations. And University of Michigan consumer sentiment, which can be a market mover, but now remember, this is a preliminary number and subject to revision, that came in 0.3 higher than the market expectation, and about 1.1% or 1.1% higher than the prior number. So consumer sentiment perhaps getting a little bit stronger here as well. A couple of other things: American Express, 3M, Schlumberger in the energy space, some dividend payout dates, and so forth. Let's take a look over the horizon here really quickly. We're going to pop over to next week, and we'll take a look and see what's going on in the next week and what is happening next week. We've got Verizon in the communication space, Ryanair in the industrials, Domino's in the consumer discretionary, that retail restaurant space, Cleveland Cliffs in the material space, Caterpillar in the industrials bringing the dividends. So there's some stuff over the horizon. Let's take a look at the economic news that is coming up next week. Nothing really on Monday or Tuesday other than leading indicators, which don't tend to lead very much. We've got EIA numbers on Wednesday that may give us a picture on the oil market. Existing home sales expecting to be a little bit softer than the last month. And again, that's going to be a number not necessarily market moving, but sector moving for sure. Continuing claims, we're going to see PMI numbers and the manufacturing and services PMIs. And then on Friday, we're going to see durable goods. And durable goods may give us an indication of this rotation, more of this rotation into domestic onshored manufacturing in terms of what that impact is. So that being the case, that gives us a little bit of insight into what might be happening here. So while you're out here, while we're out on this space right here, one of the other things that you can do is you can find our webcast here at youtube.com at Trader Talks Webcast if you want to learn more. We teach 35 hours of webcasts a week. We record all but 2 of those sessions. But if you want to learn a little bit more, I know somebody was asking about the ThinkScript class. You can come in here and type in ThinkScript. Michael Fairborn, my good friend out there in the chat, and thanks for answering that question. Michael Fairborn teaches that class on a regular basis. Here's the playlist, and you can see when that's coming up. You can also see when those archived events are. So some great resources right here on the Thinkorswim, on the youtube.com at Trader Talks webcast page. And then if you want to dig in a little bit more, you can click right here on schwab.com/coaching. So coming up next week, by the way, and I want to pop this up so that you can see this. Coming up next week in our calendar, I wanted to show you one of the things that is happening, and that is this event right here. So starting on Monday, July 21st, you'll see this link right here, Advanced Option Strategies. And this advanced option strategy, and again, we're not talking about options, we're not talking about trading. This is some content that we've got coming up where you're teaching a virtual workshop with the topic being advanced option strategies. Now, I'm not recommending that you come to this. I'm not suggesting that you come to us. I'm not suggesting option strategies are appropriate. Remember, they are not suitable for all investors. But that's an opportunity. If this is something of interest, you can click on Learn More. You can register for that, and you can join us. And uh, um, this virtual workshop may potentially be recorded. Now, Contra asks the question, which two don't get recorded? The two that don't get recorded are the ones that deal with ETFs, exchange traded funds, due to regulatory reasons. So we stay away from recording those because of some of those requirements. But you can join us for this virtual workshop. And if you have the opportunity to travel, we would love to have you join us, not in New York because we're full. But if you want to come and join us for our workshop coming up in Chicago, if you're in the Chicago area, August 15th and 16th, we would love to have you join us there. We're going to be in Schaumburg. I know it's not technically the city of Chicago. It is Chicago adjacent, but it's nice out there in the suburbs. Come and join us in the suburbs. We will see you there. We're going to be there on Friday and Saturday, the 15th and the 16th. Me, Kevin Horner, Joe Mazzola, Ray Kimbrell, Scott Durfee, we're all going to be there. It's going to be a fun time. Come and join us for that. And by the way, it's no cost to you. Just click on Learn More and you can set up your registration and you can come and join us. We'll even buy you breakfast and lunch each of those days. All right, let's pop back over here really quickly to our webcast page, or excuse me, to the Thinkorswim desktop software page. And let's bring up our single grid one more time. Let's bring up that RSI, RSI. And we'll bring up that RSI indicator. I'm going to pop our volatility closed. And let's take a look at some of those big players as far as earnings this week. AXP. And this follows right on the heels. American Express follows right on the heels of two airlines that announced their earnings. And why might you ask that am I talking about American Express in the context of airlines? About 20% of American Express revenue, card revenue, comes through, maybe even a little bit more than that, their partnership with domestic airlines for affinity cards and their loyalty-based programs tied to those airlines. So you can see that American Express post earnings down just a little bit today, but maybe giving us a little bit of a hammer-like candle. Last week we had Delta Airlines reporting earnings. We saw a pop to the upside and it's kind of gone sideways. So maybe reached that cruising altitude here. UAL as well, making that little bit of a move, despite the fact that initially the move was to the downside on the earnings announcement. And then the other big one that a lot of people were watching and paying attention to was this one, NFLX, on the heels, maybe not quite in the upside down yet, but on the heels of the release of the last season of Stranger Things, maybe a little bit of an invert or maybe a bit of a head and shoulders here, and that break of that diagonal trend line and a pretty significantly dropping RSI, maybe taking this down, but not necessarily into the upside down. A couple of others that I wanted to point out here really quickly in looking at some of the moves this week, COIN. And again, remember, when you talk about cryptocurrencies and crypto-based securities and anything that has anything to do with crypto, make sure that you are aware that there are risks that are associated with these trades and with these companies that are unusual, right? Based on the fact that there are some tied to cryptocurrencies who are not backed by actual value. You can see this kind of long-legged, what we might call a long-legged spinning top candle today, right? Where you get this long move to the upside, a long move to the downside, and it really ends up going nowhere. And that is simply a sign of typically indecision or imbalance or equilibrium, if you will, but testing price ranges above and below. Now, the one that I want to look at, and you've seen me talk about it on my X handle, and that is this one, JOBY, Joby Aviation, and starting to see that move continue, but maybe starting to perhaps moderate a little bit as we get a gap down and a bit of a rally in today's trading. So that being said, as we start to see those moves to the upside, I'm going to finish with this one, and this is McDonald's, kind of in the middle of the range here. It's kind of hanging out around that 300. And why in the world would I finish on McDonald's doing pretty much nothing? I'll tell you why. Here's the reason why. Because tomorrow is National Ice Cream Day, and McDonald's has done nothing to fix their ice cream machines. There you go. There's my finish for today. Guys, thanks for joining me today. My thanks to Michael Fairborn for being here and helping out. Thanks to all of you for chatting in your comments and questions. We will see you again back here Monday morning for a full slate of webcasts all next week. Have a great weekend, everybody. We'll see you soon. Bye-bye.